Thank you so much for joining us on ET Now. Ameera, to begin with, it has been strong this time around in the quarter gone by. You've recorded the highest ever quarterly revenues. Do you think that this kind of a trend is here to stay, and will you see your margins expand further from the current levels?
I think at this point of time, the focus is definitely more on growth and revenue and volumes. It's about patient acquisition, bringing consumers into the foray, and then showing them what the Metropolis brand is about. There are currently three pressure points from a cost perspective. Number one is the appreciation of the dollar against the rupee. And a lot of the industry uses materials which are imported, and a lot of this is dollar denominated. And therefore, that I think will continue to play out till the dollar stays strong. We don't know when that's going to be. And the second, obviously, with some new competitors coming in, there has been a pressure on manpower cost. So I would say at this point, margin sustenance is the focus, but revenue growth is the focus.
Given these concerns that you've highlighted, going forward, do you think that you'd be moderating your growth estimates or your outlook when it comes to your revenues as well as your margins going forward? And how are you gauging the overall competition going forward, even within the diagnostic space? Will pricing pressure persist for leading chains?
Honestly, pricing pressure there's been a lot of noise around pricing pressure, but frankly, it's in very small pockets. If you actually see some of the new competitors, there's pricing pressure in 20, 30 tests, on the brick and mortar side in the semi-specialized category. And this is only from the channel of B2B. So really, if it's in that particular pocket. On the B2C side, frankly, consumers and patients came to us because they knew the scientific accuracy, expertise, and knowledge of Metropolis was far superior. And therefore, they came to us knowing that there are other labs that are cheaper, but probably don't give us accurate reports. And I think when people are looking at their health and they're doing pathology tests once a year when they're sick, honestly, they are not so concerned about whether I'm saving 50 rupees. They're more concerned about, do I get the accurate report? So on the B2C side, I don't think we're really facing that pricing pressure challenge.
Sure. So tell me, what was the performance, Ameera, of Hightech this time, and what is the kind of growth that you can expect going forward?
So we've seen a 18% quarter-on-quarter revenue growth and a 19% volume growth in Hightech from last quarter to this quarter. We've already been working on some of the synergies and operational benefits of having a lot of infrastructure together in Tamil Nadu. So I think the work has started, and I think it's been definitely a very interesting year. We've done a lot of work behind the scenes, and hopefully are now positioned with the platform for growth going into the next
year. Right. I'm just looking at what kind of digital contribution you've had, and you've had some pretty aggressive plans there, I must say. To try and get contribution to 33% over the next 3 years, which you've talked about as well. What gives you this kind of confidence, and what is the plan that you've set out to be able to do things differently with respect to competition, which also has very high, intensity in the diagnostic space now?
Look, I think there's a journey for each one of us, and I think us being an incumbent who has already earned trust and credibility and thought leadership in the industry from doctors as well as from consumers, we now have an opportunity to do more consumer connect and more consumer engagement. Our focus, has always been on the doctor because we're talking a medical language and the doctor understands. But we feel if there's a way to empower consumers with these tools, health tools, and health information that makes them even more in charge of their own health, this is a direction that we would like to go down as well, while we continue to focus on doctors also and speak the medical language. So this opens up new avenues, new opportunities for us. And that's why we believe that the wellness category can grow, and finding consumers and empowering them with their health information through digital channels and then bringing them as part of our ecosystem becomes a sort of a more reality in the next few years. So, we're excited for all the opportunities the diagnostic space is opening up to. And we think there's a lot of work we can do on the front end as well as on the back end that can help our financials really stay strong.
Exciting opportunities. What's the outlook in terms of acquisition plans going forward? Can you tell us a little bit more about the chain expansion as well and what the targets are in place?
So I think, look, I think there are lots of available acquisitions, let's put it that way. A lot of people, are not sure how to grow in the industry. The unorganized sector has been hit quite hard. I think post-COVID, with a lot of new competition coming in, and even pre-COVID, their growth in volumes estimated by us is, was closer to 4 to 5%, and then they used to do some price increase every year of 2-3%, and they were content with that, sort of an 8% growth for the unorganized sector. I think post-COVID, that volume growth has come down and pricing is challenging for them. And I think therefore a lot of them are struggling and sort of saying that, look, is there an exit possible? But I think, from our perspective, largely, if you look at the industry, there are few players who build core business in a quality way, focused on either science or service, which is not based on commercials or only promotion schemes. And really, we would either ideally like to partner with firms which stand for that science and that service. And if there are opportunities that come about that the business is built on those principles, we'll always actively consider it. But as you know, we've recently done an acquisition a year ago, a Hightech, and we are positive about the value that it will add to the firm. And our return on capital employed continues to be very strong even post the acquisition, and we believe that in another year or two, this will become even stronger. So small acquisitions we will keep doing. If there are larger acquisitions which are truly standing by our principles, we would definitely consider.
Appreciate your time then. Thanks so much for joining in and giving us a view on Metropolis as well as the growth plans going forward.
Thank you.
Just a quick check.